Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at the main theme of the video, and that is going to be focused on the most accurate Bitcoin indicators showing when the bull market for Bitcoin will end. These are some of the indicators that I've been showing you over the last many months so that we can keep our focus and not get swayed by the short-term distractions. I'll also be having a look at the pi cycle pattern, which I showed you last week, and to see whether that's still intact and where do we go from here. And as per usual, I'll have a look at what's going on in the news as well as the wider markets. We'll have a look at the dollar and the 60-day cycle for Bitcoin. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder. Please remember, everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. And as per usual, I will start with the main theme of the video, and that is looking at the Bitcoin exit indicators, which we call the Bexit indicators here on this channel, and have a look at exactly where we are. And I'm going to go through the list as per usual. Okay, I'm going to start off with the first cycle since Bitcoin's inception back here in 2010. So this is the first 4-year cycle which culminated in the top in November 2013. And what we've got on the left hand side is the pi cycle, and the settings on the pi cycle is the 350 simple moving average multiplied by 2. This is how it's calculated. And the short moving average is the 111. So on the chart, the 350 is the red line and the 111 is the green line. And in last week's video, we got a comment about explaining some of these indicators that I'm using. And if there is anything that you don't understand, and I think the usual method for most people, so instead of me explaining every single indicator, which will take up a lot of the video and people will get bored, if we'd be kind enough to just type in pi cycle in Google, and as you can see quite clearly, just on the first page, you can use any of these definitions, but basically here, the pi cycle indicator is a technical tool used to identify potential peaks in Bitcoin's price cycles. So that's all you need to know. You don't need to know the technical details and the background of it. It's how you can use it for your benefit. And this is exactly what I'm trying to show in each of my videos. So now everybody knows what the pi cycle is. And as you saw with that definition, it predicts the peaks of each of the previous Bitcoin 4-year cycles. So the first 4-year cycles came to a conclusion here in November 2013. But as you can see from the first cycle, we actually had 3 peaks. One there, and the actual eventual peak. Now the red line being the 350 started a little bit later than the green line, but if you extrapolate it back down here, you'll see that it also crossed at the first peak, it also crossed at the second peak, and the final peak here, right at the top. So this really set the stage for a pattern that could possibly repeat in the next subsequent cycles. And this is exactly what it did. But notice something before we get on to the second cycle, that the first cross here had this gap between the red and the green line. So there was quite a bit gap there. And in the second peak, after it crossed, it had a gap between the green and the red lines. And similarly, in the third peak, we had this gap here between the green and the red line. So you can see on all of the 3 peaks, there was quite a bit of gap after the cross and the peaks had topped out. And this is important to note when we look at the second and the third cycle and what it could mean for the current cycle. So this is the second cycle here, which ended in December 2017. That was the previous one in November 2013. And you can see with the red line and the green line of the pi cycle, the 2 lines did not meet until it got to the actual top at the end of the 4-year cycle in 2017. And as noted here, the green line and the red line had less of a gap between the two after the cross. And many people have observed this, that these crosses are becoming less and less pronounced. So let's move on to the last cycle in 2021. So that's the peak of the 2017 cycle with that cross. And once again, the red and the green lines do not meet until we get to the 64,000, the first peak in 2021 over here. And as you can see quite clearly, the green line doesn't really cross very prominently above the red line. It doesn't mean that the current cycle will either skim the red line or be a little bit shorter than the red line, or indeed it might even go much above the red line. So we just have to keep an open, fluid and flexible approach to this. But what we can say for certain is that each of the previous 5 peaks of the Bitcoin cycles, the pi cycle has been an incredibly accurate indicator of the tops of the Bitcoin bull markets. And as you can see quite clearly, the 69,000, the second top, by that time we'd already peaked. So the technical top was the 64,000. And if we move on to the current cycle, we can see quite clearly, as in the first 3 cycles, the green line has now started to move significantly in the trajectory towards it actually crossing the red line somewhere along the line here. So this is where we're hoping in this period, anytime in the second half of 2025 is where we're expecting the top of the bull market to be. And the million-dollar question is, will the green line cross the red line, or will it actually just skim it, or will it just fall short of it? But certainly what we can say is that since it's been a 100% accurate predictor of the top of the bull markets, we can use a confluence of other indicators, which I'm going to show you, which will give us a very good high probability of exiting the market for those who want to do that. And I respect the fact that many people want to just hold Bitcoin for the next 5, 10, 15, 20 years or whatever. Everybody has a choice to make. But for those people who want to exit the market and are looking for the exit indicators, then the probability is that when the green line comes close to the red line, we can keep an even more determined eye on the cross and look at the other conflating indicators, which would give us a safety net of exiting at or near the top of the Bitcoin bull market. The second indicator I'm going to be using is the Maya multiple. And as you can see with this green line, this is set at 2.4. And what we found is that each of the peaks of the previous cycles have always gone above the green line. So you can see in 2017, it went above the green line. In April 2021, we went above the green line here again. And back in November 2020, and back in 2013, we peaked one more time above the 2.4. So as soon as we get above the green line, or very close to it, we should keep an eye on this. And currently we are at 1.18. So we have quite a long way to go from where we are currently to the green line here. The next one on the list is the Bitcoin top cap. And once again, if you look at the blue line, it's actually skimming over all of the previous peaks that we've had. These were the first 3 peaks of the first cycle, and then the 2017 peak. And this is where the anomaly is. At 64,000, the price didn't come and interact with the blue line, and neither did it do so at 69,000. So these are the only 2 anomalies, but 4 of the previous 5 peaks, giving you an 80% probability that we're going to be coming somewhere near the blue line, if not going to actually interact with it. But as you can see, the gap is quite a big gap so far, so we're not quite there yet. The next one I want to look at is the Puel multiple. And one thing we should notice is that all of the previous peaks seems to be a declining trend line currently. So the last one in 2021, where it barely came into the red zone here. So the last cycle, as we can see, back in 2021, the price just about protruded the red zone. This is where the overbought zone is. So quite clearly, the red zones and the green zones here, these are your buying and the selling opportunities. So what we're waiting for is an exit opportunity. So currently we're down here, and there's still quite a long gap to go to reaching the top in the red zone here. Another indicator that I wanted to show you, very similar to the previous one I've shown you, very similar to the Puel multiple, and that is the everything indicator. Now this everything indicator really takes into account 6 actual metrics here, and that includes the MVRV Z score, as well as the global M2 money supply, the Puel multiple, spent output profit ratio, Crosby ratio, and the active address sentiment indicator. So this particular everything indicator actually includes all of those 6 metrics. So within this one particular indicator, there are 6 indicators all rolled into one. And one thing we noticed, just like the Puel multiple, is that you've got the red and the green zones. So this is your buy area. Whenever it comes into this area, this is where you buy. And when it gets into the red zone, this is where you actually sell. And the last peak, around 64,000, we came up just before we actually peaked. And back in 2017, we were well into the red zone there. And currently where we're at, we're nowhere near the red zone. So as soon as it starts to come up to the red zone, this is when we should be alerted that by using some of the other indicators, the confluence will give us a very good idea of when to actually exit the markets for those who want to do so. Okay, moving on to one of the other indicators which I don't normally show, but it's something that we should keep an eye on, and that is the RSI. And I've actually marked the tops of all the previous peaks. And if we go to the first cycle end, back in 2013, you can see that the RSI reached, if you look on the RSI number here, when I place the cursor at the peak here is 97.42. The second peak was at 96.77, and the last peak at 64,000, the RSI was at 94.51. So you can see it's a declining figure as we've come to the subsequent peaks. So currently where we're at 72.13, and the trend line would suggest that we have quite a bit of room to go to the upside. So what we're waiting for is a big move to the upside here that will take the RSI up to the white trend line here, which would then match up with all of the previous peaks. So once again, this will give us a little bit of a confluence with the other indicators. The next one I want to show you is the MVRV score. So if you go to the indicators here and type in MVRV, you'll see this one here by Der Prof. If you click on this, the main line to focus on here is the purple line at the top and the purple line at the bottom. And then notice the blue line here, which is protruding between those ranges. Every time it hits the purple line, you'd get this red vertical zone, which tells you that the peak of the market has been reached. That was the first one. The second one, right on the end of the bull market. The next one was here, back in 2017. So this was a little bit earlier. And then this was followed by the actual peak in 2017. And the last cycle, this red zone actually also hit a little bit earlier than the 64. So the way to use this would be that as soon as this red line comes along, we can be alerted that the market is about to top out. And then in the next cycle, when the blue line comes back to the purple line at the bottom, like it did here, back at 15,000 in the last cycle, you get a green vertical zone denoting a buy. And back in December 2018, we got the green zone here to buy, based on this, the blue line interacting with the purple line. And then back in 2015, we got a large green zone here because there was a lot of consolidation at the low level. So you had a great amount of opportunity to buy here. And also this green line, which was a great opportunity to buy here. So this is one of the indicators I will be showing you at the end of the next bear market, which will allow you to get in at the bottom of the next bear market. So as we can see quite clearly at the moment, we're nowhere near the purple line at the top, which will set off the red zone. And finally, I want to show you this particular indicator, which I show the private members in the private member section of this channel, and that is the linear regression candles. We use these very successfully to do the swing trades all through 2023. So if you go to the indicators and type in linear regression, and it's this one here by Yugavu, and the settings on these are not the default settings. I've actually changed these to the inputs being 7 on the signal smoothing and 11 on the linear regression length, and this is the style. Once you put them on, you can see that they imprint on top of the actual price candles. So in order to just see this properly, if you go to the 3 dots here on the left hand side and click there, and go down to hide, and I'll take the other lines out as well. Now notice one thing here. This is an incredible indicator that gives you an incredible visual of when we're about to top out and when we're about to bottom out. So in the first cycle here, you can see we get a series of white candles, and when the candle changes, which is over here, that is your first sign that the market is about to top out. And if you want to wait for a confirmation, then you wait for this white trend line where the red candle then closes. So this is your final confirmation that we've topped out. And then in the bear market, you can see quite clearly we get a series of red candles, and this is your first white candle change. But if you want confirmation, you wait for the white candle to get above the white trend line, which is here. That's your confirmation that we've bottomed out. Then the next 4-year cycle, you get a series of white candles one more time, and the candle change here is your first signal that we're topping out. And you wait for the confirmation here, and then you're in the bear market. Then in the bear market, first candle here, confirmation there. And this is where we went up to the 14,000 in June 2019. And this is the $64,000 change here. So you get a series of white candles, color change here, and then confirmation here. And then the bear market was all the way down here. First candle change, confirmation, and this is the bull market that we've been in all the way through. Now notice something, that in this cycle, which seems to be playing out slightly different to the previous cycle, that at the end of the bear market, we didn't get our first color change until the top of the market. Similarly, in the second cycle, no color change of the candle until the top of the bull market. Similarly here, although we had a breakup with the 14,000 top, so this was broken up by having two similar cycles, but this one here, we've had color change here and a color change there. And we seem to be in 3 cycles here. This is the first one, the second one, and then now we're currently in the 3rd cycle, and this should culminate in the top wherever that's going to be. So what we've really got to look out for here, these white candles pivoting to the red candle somewhere up here. So we'll keep an eye on this, and when that happens, I will be very happy to bring that to your attention. So there you have it. You've got virtually all of the indicators. Now imagine if all of these indicators were to conflate at exactly at the same time at the top of the bull market. How wonderful that would be. And as the song goes, you don't need to know much about your history or your geography. As long as you can get a change in the candle, what a wonderful world that would be. And if we have a look at exactly what's going on in the news out there regarding Bitcoin and how it's affecting the Bitcoin price, we saw on Friday how the Bybit hack of $1.4 billion had an effect on the markets. But as you can see from the title, Bybit has now fully closed the Ethereum gap, as Bybit has actually bought $742 million worth of Ethereum between February 22nd and February 23rd. So that's over the weekend. So now that's made up. The market should come back to normal as per this news item. So what is the range of the Bitcoin price that we can expect in the coming 24 to 48 hours? So this is the liquidation heat map. This is the leverage players with their stop losses at the tops and the bottoms. And this provides a very good, accurate picture of exactly where Bitcoin is heading in order to take out those stop losses. The bottom of the range at the moment is at 94,300, and at the top there isn't very much a pronounced or prominent zone. So the nearest one is really around about here, which is around 96,700. So this is where we can expect 94 to 97 for the price to be in the next 24 to 48 hours. And if we move on to the dollar, one of the things that we've noticed that there was on the weekly time frame here, there was a bearish divergence. As you can see from these two tops, this was flat and the dollar had been rising quite steeply here. So this divergence was telling us that we're virtually topped here and that we were expecting for this to come back down. And since we've broken this strong support level, we're currently at this support level of this resistance here. So once we break that, then the next levels would be at these resistance points here. So if you put a line across there, this is the next stop here around about 104. And we can see the RSI has quite a bit to go. So let's see where this goes. But certainly the direction and trajectory for the dollar is to the downside in the coming weeks and months, which should give us a lot of room to maneuver for the wider markets like Bitcoin to start making moves to the upside. And if we move on to the SPX and we look at the daily time frame for the 60-day cycle, we were moving very nicely past the beginning of the cycle here and making new highs from the previous peak, but the Friday spooking of the markets by the Bybit hack brought the price all the way down. But with that now out of the way, as we've seen with the news story, we should now find support here and then on our way towards the mid-cycle, which is going to be about the middle of March. And if we move on to gold, we seem to be seeing a bearish divergence after such a big, powerful move once we broke above this neckline. So for the last 12 months, we've had this big rise for the gold, and the RSI, you can see, has been following that trajectory until now, where the price is protruded above the previous high, making a higher high for the gold on the price line, but a lower high on the RSI. Of course, that doesn't mean that it's going to suddenly top out, but certainly you need to keep an eye on this. But as we've seen before, these bearish divergences can continue for quite a while. So this could quite easily keep going. But this is your first signal, first danger sign that gold is now topping out or coming toward the end of its cycle, which can still stretch another 6-7 months. Okay, moving on to the 60-day cycle for Bitcoin. We are currently, from the start of the cycle here, on the 30th of December, we are currently on day 56, so we're well deep into the end of the cycle coming up. And we normally would expect some sort of a flurry down to a low point to create that bottom for the start of the new cycle. At the moment, we just have this bottom here, which could still become the start of the new cycle yet. But to confirm that, I would want to see the price above this green hammer candle here. And that candle is at 102,569. So once we get above this, this will be confirmed as the start of the new cycle. And then we have an opportunity, because once we get above the 102,000, we'll have an opportunity to run up and retest the 109,000 here. And last week I was showing you the green line of the pi cycle, that in the previous 3 cycles, once we'd broken above the previous all-time high, in our case of 69,000, then the price line doesn't close below the actual green line. And what we got yesterday was we closed right on the green line, and the current daily candle, which is this one here, is now below that line. And judging by the comments from last week's video, I think people were just holding their breath for us not to do that. All I would say is please don't kill yourself over a candle on a chart just because we've broken below the green line. First of all, we haven't closed below it yet, but even if we did, it isn't the end of the world. And as we saw with the linear regression candles, this cycle seems to be playing out slightly different on many, many different measures. So it may well be that this time around, in the 4th cycle, that the price actually does close below the green line. And that's fine. That's more information for us to know that this time around, this cycle is playing out differently on many measures, and this is another one of those different measures. And some people can get very fearful that the market is not behaving as it's done in the first 3 cycles. But I would be rather more optimistic than that. It means that we could really go up in a very big way, unlike what we've ever done in the past. And the top figure for Bitcoin could be completely different to what we expect. So all we have to do is to keep an open, fluid and flexible approach to the whole thing. Always take a holistic picture and zoom out on the charts, and it will give you a lot more information and a better bird's eye view with more options of what could possibly happen. So please don't worry about the green line. My job is to look at the patterns that have developed over the last 3 cycles and elicit information and deduce from them the possibilities and probabilities of what could happen in the future to give us some guidance, give us some direction of where the Bitcoin price is going. And it's all useful information. Please remember, nothing is black and white, right or wrong, good or bad. Always let Bitcoin guide your objectivity. So the question is, where do we go from here? If you look at the RSI at the moment, what you're getting is a bullish divergence here, where the RSI is making a higher low here, and the price has made a lower low over here. So this would suggest that we may well be in a period of going up. And if I put on the linear regression lines on the 60-day cycle time frame here, we can see quite clearly that if you look left here, that we got a big run up on the white candles, and the color change over here told us that we're in for a period of consolidation. And then we had another run up, and then the color change down here after a large pullback down to the 91,000 here. So we can see these candles have actually predicted all of the ups and downs within this consolidation pattern. And currently what we've had is a rundown on this pattern, but the last few weeks, what we've got is an alternating red and white candles here, which is telling you that this is about to break one way or the other. There is a big break on its way very, very shortly. And this is confirmed by the Bollinger Bands. These are the yellow lines at the top and the bottom, which frames the price action. So whenever you get the Bollinger Bands which start to converge close to each other, it's putting pressure on the price to move either to the upside or the downside. So the break in the Bitcoin price is about to come. And of course, we're expecting the price to go to the upside. But being the end of the 60-day cycle, we could quite easily run down to a support level of around about 91, or even wick down to here at 89, or even down to these levels at 86, 87. So this is where you would expect a wick, which should be bought up very, very quickly to close the daily candle above the 90, 91 level here. So this could be the characteristic of the end of this current 60-day cycle before we move into the next cycle in March. Okay, I'm going to move on to the private member section that we run here with the Bitcoin miners, and it's something that I haven't focused on the Mondays videos over the last few weeks, simply because the Bitcoin miners were coming down and it wasn't a good time to get on board the Bitcoin miners. And what they're showing now are signs of bottoming out. And this could well be an opportunity for some people who are not afraid of volatility. So as we know with the Bitcoin miners, they're a high volatile play. We know with Bitcoin that Bitcoin is a very volatile asset, and the Bitcoin miners are far more volatile than Bitcoin. So if you're of a nervous disposition and get very anxious when the price pulls back by 30, 40, 50 or even 60%, then the private member section is definitely not for you, and I would keep away from that. However, if you're seeing the current malaise in the market with the Bitcoin miners, if you can see that as an opportunity, then that may be something you may wish to explore. So what we have with the Bitcoin miners is that we have a portfolio that we've been running for the last 2 years. So this is the Bitcoin miners portfolio that we've been running on the private member section of this channel, which started on the 6th of January in 2023 with around $100,000 invested in these Bitcoin miners. Now at the end of the 2023, we went from 100,000 to 434,989. That was on the last day of trading on the 29th of December in 2023. And what we saw during 2024 was a terrible year for the Bitcoin miners, because what they've done is to use 2024 as a period of consolidation, just like Bitcoin used 8 months during the last 8 months of 2024, where Bitcoin went sideways from $73,000 onwards. So currently what we have our trading portfolio that we run, where we do quite a bit of trading based on ratio charts and ratio trades. And from the beginning of 2024, with that amount of money that we'd made at the end of 2023 of $434,000, the current figure is at $432,000. We're just about breaking even on the 2024 start. And I'll show you with the charts exactly where we're at. And our target here, which may seem a bit ambitious for those people who are not familiar with the Bitcoin miners, because they can quite easily 5, 10 and 15 and 20x from where we are now, because that's what they've done in the past. So our target is $5 million from the current 432,000 at the close of play on Friday. So many may think that this is virtually impossible, and that may well be the case. We're always open and fluid and flexible in all things. But let me show you a few charts as to why there may well be a great opportunity that's coming up in the next few months. So this is the history of Marathon Digital Holdings. In the last cycle here, between 2020, during the COVID situation, it bottomed out at this point. By the end of the bull market in November 2021, it reached the price of $83 here. And that was, in terms of the growth of the price, that was at 234x. So $1,000 invested down here would have given the investor $234,000. Now, the reason why this is not for the faint-hearted is because even along that big massive trajectory culminating in the 234x, you can see quite clearly there were a lot of pullbacks. From here, there was a 40% pullback. From this point, and this is the last phase of the bull market, there was a 70% pullback, and towards the top, just for good measure, there was another 68% pullback. And currently what we're getting, as you can see quite clearly here, is that during 2024, we've really just consolidated at quite a low level. So while we had a very big move here in 2023, 2024 is really more like a bull flag with a continuation pattern to the upside. This is what we're expecting. There are no guarantees or certainties, but the current price here may well present an opportunity for those who can see the opportunity. And that is that we've had, just in the last few weeks, we've had a pullback of around 50%. So just like these pullbacks before the big moves to the upside, as you can see here, we've had similar experiences all the way from when Marathon bottomed out at $3.11 here. We've had increases from the bottom levels. The first increase at the start of the bull market was over 200%. And this big move here was just over 300%. But as you can see, but also interspersed with them were these big moves to the downside of 46%. And this one was a big one here at 64%. So this is what I'm talking about. The Bitcoin miners are an incredibly volatile asset. And for those people who can hold their nerve on the downside, then the rewards are there for the upside. So we are currently at the bottom end of this particular trend. And if we put on the linear regression lines on this weekly time frame, so it's a large time frame, we can see that it's showing that we may well be about to turn around for a big move to the upside. At the end of the day, if you've been following the Bitcoin miners, you may well have seen a lot of negative comments from people who don't read charts and don't look at things in an objective way. So if you take away the emotion and if you take away all the fluff that's around the Bitcoin miners and just look at the charts giving you objectivity, rationality and logic, then everybody can make up their own minds. So what we've got here from the bottom of the bear market back in the end of 2022, if you follow this particular indicator, the linear regression, you can see that the white candles were going up in this big rally here until the color change where people could have taken profits. Similarly for this rally, color change here and another rally, color change there. And in the pullback, which was around 60%, again, We got a color change here to give us an idea that we're about to go back up again. And this is the consolidation we've had since the beginning of 2024. And this is where we find ourselves. This is the big fall that we've had recently of around about 42%. And what we're now getting is a change of candle from the reds here. So this may well be suggesting now that we're on our way to a big move to the upside. How far that will go, nobody knows. I don't have a crystal ball. Nobody does. But what we do know is that if you look at the patterns, they tend to repeat from the historical perspective. So you can either look at this as an adversity or as an opportunity. Everybody's got to make up their own mind. So you may well be wondering what we do in the private member section. If you go to my channel, you'll see that in the videos here, I do a Monday's video for the general subscribers, as I'm doing today. But on the Wednesday and the Friday, we do a dedicated video for all the Bitcoin miners, private members. So that's on a Wednesday and a Friday, where we cover everything that's relevant and important for the Bitcoin miners. And when you become a member, you'll have access to this membership tab. And you can see from the membership tab here that on a daily basis, Monday to Friday, at the end of the close of the trading session, I do a market update here to give you a full summary of the day's actions with both Bitcoin and the Bitcoin miners. So this is the kind of thing that we do there. So this is the market update for last Friday. So you can read this in your good time. And at the end of each of these market updates, we also do mindset training, because if you're a serious investor and you want to be a serious trader, you need to have a serious mindset to succeed in those two arenas. And this is the kind of mindset training that we do here, as you can read in your good time. So as part of the mindset training, I do post quite a bit of videos like these here, 10 things successful people never do. So it's an overall personal development to work on ourselves, to bring ourselves in line with successful trading and successful investing. And the last video that we did was the profitable trading signals at reversal points, as well as looking at the new indicator for all reversals. And also I covered recently the most undervalued miner. So if this is of interest to you, and like I said, if you don't see this as an opportunity, then obviously keep well away from it. So if this is the kind of thing you're interested in, then below all of my videos here, you'll see a join button, and also in the description box, you'll get this Bitcoin Miners membership join link. If you click on this, so if you think that 2 videos per week, plus a market update every single day summarizing Bitcoin and the Bitcoin miners is worth 1 coffee per week, and that comes to £12.99 per month. And that will give you access to the membership tab and everything else that comes with it. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.